The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. I've started off the show here with the chart from 2014, December. Same type of situation, Federal Reserve. You want to see that volatility that's in there, folks. So what John Logan mentioned earlier is trade the reaction. Don't trade the action because it can be really crazy in there. So always protect yourself. That's the main thing that we want to watch. But there was a pretty wild volatility last year. I imagine this year is the same. Fed funds has already said the rates have increased. We've looked at that many times over the past. So you want to be able to pay attention to that today. I still think that we will be heading down. We've made the Fibonacci ratios. We've had the 3-day rally. We bottomed on Monday, Tuesday. We topped last night somewhere right at the 61% retracement in the Dow Jones to the exact penny. Whether that holds or not, I'm not sure. The NASDAQ also got up there, and the Dow Jones, or excuse me, the S&P 500 missed it by about 4 or 5 points. The number there is 2057 in the March S&P. We got to 2052, I believe, is where we got to. Now, I had a couple of requests, but before I get to that, I wanted to mention that last week when we were here, what am I talking about? Yesterday when we were here, we were watching the contract for the natural gas, the February contract, or the January, doesn't make any difference. But we were looking for a potential low here at the 180 level. Well, last night we hit 1078 and change, and now we're up about a nickel already from that level. So that pattern is definitely complete. That's known as the butterfly pattern. We have the ABCD pattern coming in at that particular level. So keep an eye on that natural gas contract. That could be a real surprise for you folks. Also, I posted into the room a link to Zero Hedge. It's an article about the similarities between what's happening now with this junk bond fund out of Boston, comparing it to Bateman Eichler, comparing it to Bear Stearns. That's a pretty tough comparison to make because Bear Stearns was a much bigger company than this, but the situation's the same. And not only that, the players are the same. It's the same people that messed up Bear Stearns are now in the same quagmire that they have up in Boston with being unable to redeem the shares of this junk bond fund. So keep in mind, because history does repeat itself. And I believe that we're over that historical time frame where we're going to see something, pretty dramatic happening. This is probably the time to be short the market. I know it's going to be tough to do, but the numbers are there, and you just have to get through this Federal Reserve announcement. And believe me, it will be wild. You saw what happened in 2014, so it's probably going to be wilder than most people will anticipate. So you probably have to widen your stops a bit during this time. But trading the reaction is probably a better strategy than having a position going into what the Federal Reserve is going to do. Remember, it's been 6 years since we've had a rate increase. That's never happened in the history of our country before. So we'll see if that's going to be the case. I want to get our hats off today to Mr. Z in the den, because he had everybody with their green lights on the natural gas when it got down there this morning. Hats off to Mr. Z. He's always got our back. So that's always really good. Now, I wanted to mention something about the the Bear Stearns situation, because historically it means a great deal to me. In 1983, I met a young man. Well, not I met a young man. I'd known him since he was a kid. But he had graduated from UCLA, and he was either going to go into the insurance business or the investment business. And so his father asked me to come over and talk to him. His mother happened to be the #1 fundraiser for Ronald Reagan during Reagan's term of governor. So they were pretty well connected to, some pretty powerful people. And I had worked at Drexel, and he had come into the office when he was just a little kid a few times. And so I told him, I said, you ought to go in to, to do this. And so he went to work for one of the firms on Wall Street that was taken over by Bear Stearns many years over. By the time, Bear Stearns was in 2003, he had been with him 20 years. He was the #1 broker for Bear Stearns. He had a huge business. I mean, he wouldn't even take an account less than $10 million. That's how big he was. And when Bear Stearns stocks got to about 103, I think he was worth about $25 million. And of course, it went down to 2. And I asked, when he got to that point, I told him, I said, do some, protect yourself, do some long-term, puts so that you could protect yourself and lock in the profit of what you're going to do. Well, he did part of it. He locked in about 25% of his portfolio. Thank God that he did that. And then, of course, it went down to where he ended up getting out with only, I think, $2 million. He's since gone on to far bigger things. He's even bigger now than he ever was before, and he has his own operation. And I don't even think he takes new accounts now, but he's done very well. But it was fun to see him do so well. And it's just one of the memories I had of the Bear Stearns situation, because I had friends in Lehman Brothers and also in Bear Stearns as that stuff was going down. And day by day, I would watch it. It was really sad to see Lehman Brothers go. It was the largest single bankruptcy in the history of the United States, I should add, so far. But that's what happened during that time. But then we had the too big to fail situation come in, and that's the way it goes. Something, folks, you don't realize when someone takes a job like when Henry Paulson took the job at the Secretary of the Treasurer, he's not allowed to have any portfolio of any kind. So all that has to go into a trust. And but the problem is, not a problem, but he was his tax situation changed a great deal when he became Treasury Secretary, because part of the thing of the agreement with that is that he didn't have to pay taxes on his Goldman Sachs portfolio of all the stock that he had in Goldman Sachs. He was, as I recall, and I remember this quite vividly, I think it was about a $250 million tax bill that he would have had in Goldman Sachs had he not been Treasury Secretary. So even though he got a very small salary, he got a huge windfall. You might want to check that on Wikipedia, but I'm 99% sure of that, because I was shocked when I was reading it at the time, and I think it was pretty much the same of what we're watching here. So we'll see I don't know what time the Fed is actually going to come out with the meeting. Usually it's at 1 o'clock, 1:15 Eastern time, but sometimes they change it quite a bit. Okay, now I've had a couple of other questions. One was yesterday we talked about the German DAX and how it was making the bottom over these past 2 weeks, just like we did. The pattern here in the German DAX is exactly the same as it was in the S&P 500, the NASDAQ, and also the Dow Jones, but this is exactly the same pattern where you had the two very large ABCD patterns coming down. You'll see the first one came in at around 10,200, and the second one came in just spot on at 10,100. And now the market has, right now it's trading at 10,550. So we've already, gone up to exceed the rally that we had back on December 4th through December 7th. So this is still a bear market. It's going to question of how much they're going to rally the thing, but I do believe that once we go below the low we made on the December 14th, which was Monday, that's the time when you want to be, get your selling shoes on, because this thing should start to drop very, very dramatically. Should we do that, because we are in a zone where we are certainly in a bear market. We've made a double bottom in the transportations. That's been incredibly bearish. The utilities are still in a bear market, and everything else is, pretty much, doing the exact same thing. The next question that I had was about the Hang Seng Index, and I like to get these questions out of the way before we get to some of these things, because I don't have time to send the charts and the emails out at the same time. So what I like to do is just talk about it on the air here so we can see it. This was the pattern that we were looking at in the Hang Seng, coming down to around 21,000. That's a perfect Gartley pattern. You have your ABCD stopping exactly at the 786, and we'll see here in just a second when I post the what it actually did, because we're at we're at 21,800 and change today. We've moved 800 points in the Hang Seng already to get up to this area. So we're having this 3-day rally. It could be a 5-day rally, and folks, this thing could even have a 10-day rally, because this market has been extremely bullish. I don't believe we're going to take out the highs that we made back on November the 2nd, because we've had so many lower tops in that time frame that would be 2105 in the S&P. In the S&P futures. So that's what it looks like, from the standpoint of the technical part of the market. But we are in a downtrend. We're having a rally within that downtrend, and with Fed Day, that makes it even more difficult. The question someone's asked me is, what's going to happen to bonds? Folks, bonds can do anything they want, and the reason why that's a huge market, it's one of the largest markets. The note market is the biggest. The bond market is the second biggest, and it is basically oversold, and so it could still get a rally, from this level, and it could, it could still go down to 4 or 5 more points. But the rates have already been increased. We've seen that in the Fed funds rate. That's the rates that the bank borrows from each other, and they're telling you that the rates are going to go higher. So the Federal Reserve is, they're just, acting what everybody else is doing, but they get all the press for it, and that's what you have to live with. So keep in mind that it's a big economic debate. Now, I didn't watch the debates last night, because politics is probably one of the least enjoyable things that I like to look at, because you can always tell a politician is lying because his lips are moving. Okay, in the land of the blind, the one-eyed man is king, and we'll be back in just a few minutes after these words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to switch gears here to talk about crude oil. We have, made that bottom down there at that 34.55 level. And so far, we've had a $3 rally, and now we're coming back to test the 61% retracement, I believe, down here at the 35.90 area. So as long as we can stay above that $35 per barrel level in crude oil, I think we've got a chance here for crude to make some type of a pretty good bottom. So we'll be watching that very, very closely. What I'm trying to do now is I prepared a really shorter term chart in the crude, but for some reason, for technical reasons beyond my control, beyond my pay grade, I wanted to bring up I'll just show you where we are in the crude, just so you can get an idea of what happened. We made the bottom in the crude just the other day. The 3 drive to a bottom pattern right down at the 34.55 level. We rallied up to 37.85, and now we're pulling back, which will be very, very close to this level of 35.90 is what we'll be looking at. So we want to watch that. Now, natural gas has possibly turned. We've had a pretty good rally off of that bottom. Heating oil we believe has already bottomed. We've had a pretty good rally in the heating oil. And the other thing that's happened is the Canadian dollar, which is a proxy for being short oil, is it just made a new high around the 38 level, which that's a big drop. I mean, people in Canada are really getting hammered if they try to buy U.S. stuff now. A lot of people from Arizona have bought homes here, you know, the last 5 or 6 years because the Canadian was so strong versus the dollar, and now that's reversed. And so it's going to be interesting to see how that affects the real estate of what we're looking at right here. Just give me 1 second. There's what I wanted to see. Yep, nope, that's not it. All right, we'll just have to move on to the next thing. But we're really close here in the oil market for a bottom. The news is just so bad, and the news should be bearish. I mean, everybody knows there's enough oil out there to, you know, to float a bunch of battleships, and most of those battleships are probably carrying extra oil, but who knows? We'll see. But when you get too many people on one side of the market, it's just a normal reaction for a big counter trend rally. That's pretty much the same thing of what we're looking at. The gold market, we've had a pretty good move in gold here today, or 11-12 bucks. All we've done, folks, is we've made lower highs ever since the high was made at the 1085 level. Each of those lows have been the lower highs have been right at either a 61% retracement or a 78% retracement of the previous move. Today's was 78%. If we can get gold above 1077 today, then we've got a chance. The 1085 will be history if we can get it above, I believe, 1077, 1078, because that would be a breakout of those old Fibonacci numbers, and that usually means that's a trend line break. That means a cycle has turned. But as to this point, it really hasn't. We're still looking at a possible low to come in gold around the 10, to go down and test that 1050 level or 1055 level one more time before we finally move higher. Now, this is Fed day, so anything can happen. So no matter what you're doing today in any of the markets, make sure that you use a stop. I know if you don't use a stop ordinarily, and if you have the discipline to use a desktop, you know, more power to you. But those of you that are not able to stand in front or sit in front of the machine, which I certainly don't recommend anybody doing, I would suggest that you would be watching a market that you know, you got to keep an eye on them today, because the Federal Reserve is in these markets just like we are, folks. Only they have inside information, and remember, they don't have to report to anybody about that. No one sees their positions. They don't know how much they've made, so you've got to be really careful in these markets. There's no there, and they, believe me, they know these technical indicators. You know, quite a bit. Now, someone's asked me the question about the Dow Jones E-mini, and I want to put the chart up for that. It shows that the Dow has made the exact 61% retracement of the high we made in December. That's not the all-time high, but that's the recent high. And we came down 2 weeks, and we rallied up 3 days. We hit the exact to the penny at 17,581. We're a little bit below that right now. So we'll take a little break. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, boys and girls, we're back. The E-mini S&P, the number on that 61% retracement for the March is at 2053. We've been up to 2052 and a quarter so far. So we'll see, what happens, with that, but we'll take a look at it. The crude oil has backed off a little bit. We dropped almost $1 a barrel here today. The high that we made today in crude oil was exactly 61% of the retracement that we made on the high yesterday at 37.90. Actually, 37.88. That came in at 37.35, and that was the high so far today. Now, if this is correct, that measures perfectly to the number that we want to be looking to buy, which is at 35.90. Now, that one I don't mind buying into a Federal Reserve or whatever the oil statistics are, because you have a potential for a bottom here from several different areas, and you know what your risk is, and if it's right, you're going to catch a lot of people with their knickers down, and that's you know what you'd like to see some of these. But we did rally 10% off the bottom in oil. It got virtually got zero press in the whole thing, so keep that in mind. But we're going to have some wild volatility around noon today because of the fact that we've had this I believe it's around 11 o'clock that the Federal Reserve comes out with their usual things to look at. So we're opening now this morning. We're stronger as we should. It's about 5-1 upside in the NASDAQ, 4-1 in the New York Stock Exchange Index, and the advanced decline line is, or the advanced declines are 1,500, which that's a pretty good, works out. But that's the early morning when the, as they say, the middle-aged crazies are out there doing their thing. But we'll have some really good indications here over the next few hours of trading today, and then also into tomorrow. That'll set up what's going to happen next. We were expecting this 3-day rally to get up to the fib point. We're doing that, so all we're going to do now is to wait and see how the Feds have you know, done this, and we'll see what's going to move over. So we will be watching this really closely. We have you know, January crude oil expires in a few days, but it still has pretty good volume in it. So for a day or two, a couple of days, it's usually no problem. If you wanted to, you could go into February crude, which is a $1.20 higher. So you've got to make that adjustment if you wanted to do that. So that's pretty much what we're you know, would be looking at. Usually when you trade crude oil, folks, the best way is to use about crude oil like gold is you know, you're looking at it with gold. Well, crude oil used to be $100,000 contract. Now it's a $30,000 contract. But crude oil is very volatile. As you know, it moves $1 a barrel, which is $1,000, which is, you know, quite a bit on a percentage basis. So you need to use about not quite $1 a barrel, around 80 cents a barrel. $800 is what I use for my stops in crude, because you've got to give it a little bit of leeway. But boy, it really hits the spot on numbers. I mean, you just go back and look at crude oil. Well, we did this yesterday when we were watching the 3-drive pattern, and then also how when it made its top up there at the 3780 area, it was doing a 3-drive pattern also. So you want to you know, keep an eye on these numbers and patterns, because they don't always work, but they're the best thing that I found. They give you a pretty good idea of you know, where you're going to be, and that's the bottom line of what we're trying to do when we do this, is get a situation where we've got a potential for either a good buy or a good sell. Remember, the buyers and the sellers are the same fellas, so you got to remember that. Okay, all right. The one other question someone asked me about Apple, the most advertised stock in the world. I still think Apple is heading, like John Logan be heading towards that level. It's had lower highs here in this whole thing, and believe me, it's got free advertising every day. I mean, it literally, if CNBC charged them for their advertising, it would probably make a couple pennies a share difference in their earnings report, but they get free advertising. Now, they show the people in lines buying all the Apple products. No other company gets that. I mean, they get the negative side of that, but they certainly don't get the positive side of it. That's the, you know, the bottom line of what we're watching here. So we want to keep an eye on Apple. But I believe what the charts tell me, that 104 is what Apple looks like from the downside. I don't have a chart to put up because I'm unable to pull the chart up and put it into TFNN at the same time, so I can't really do that. Someone just asked a question about this Fed funds rate that I mentioned. I'll put this up again to let you folks look at it, because it basically the rates have already been increased. You can see this by looking at this chart. This is the rates that bank trade between each other, and you know, the rates have gone higher already. And whatever the Fed does really means nothing. And I think the markets are not going to look at it that way, but that's exactly, you know, that's exactly what happened. The key point is that the real important cycle low that we made on December the 14th, when we completed all of those patterns, and the Dow Jones, the New York Stock Exchange Index. I wanted to show you the comparison between the DAX and the New York Stock Exchange Index. You'll see that both of these completed the multiple ABCD patterns down here. This chart that we have here, you'll notice that the 14th is not in yet, because this is what we looked at in the letter Monday coming into this weekend, to see this target here at 99.20. The low for the New York Stock Exchange Index on Monday was at 98.95, so it was about 20 points under that. And of course, we've had a pretty good rally into that gap already, so this pattern is definitely complete. So it's just a very important pattern to watch. So we want to see how much it's going to rally from this level to see if it's going to be doing the same thing. Okay, now we want to watch. Let me see what other questions we have. No other questions. Okay, 877-927-6648 if you have any questions, and then we will move on. I want to mention that one of the things that I'm going to be looking at for 2016 is for a turnaround in some of these commodities that have been hit really badly, i.e. crude oil, heating oil, natural gas, gasoline, soybeans, corn, wheat, and it's particularly the grain markets, because if the dollar does start to back off from these levels, that means that our grains are going to be cheaper, and we might get some type of, you know, residual buying because of this. The El Nino has certainly affected everybody. They're getting torrential rains in parts of California, which is really good because they're in the midst of a drought. But the problem is that water gets in there, and it's going to cause, you know, massive mudslides. You know, one thing, you know, after another over there. If it's not one bad thing, it's another. So we'll see if that's going to be the case. I didn't. Someone's asked me a question about the what do they call that? The debate last night. Folks, I don't have any interest in that stuff. I don't think it makes any difference who gets elected president. It really is what's important, I think, is the House and the Senate, because, you know, that's where at least you get to make some type of a plea to your politicians that you want to see something happen. But we need someone that's going to be very strong, because we do have a situation where we're basically at war, and we want to just be careful, because it's pretty much what we're watching here today to see if this is going to be well, not today, but this election coming up is going to be an important one. It doesn't make any difference who's elected president. We just elected a president, you know, 6 years ago that had virtually no experience at all. We know very little about his background. And yet, you know, here still we are. We're still one of the greatest countries in the world, and I still think we will remain that for quite a while. I'm not so sure what's going to happen over the next election if we get 8 more years of a you just can't do that, but that's neither here nor there. Now I'm going to get off my soapbox and shut up. Okay, now someone's asked a question about the Treasury bonds. I tried to mention, I'll put the chart up for bonds in here, and you'll see that we've been in this really tight trading range for the past how long has it been now? Well, it's been for the past month, well, past 6 weeks. And so on the upside today, if we were to get up to around the 158 level in the March bonds, I would be a willing seller there, because you've got lower tops and the bottoms are equal ever since September. So it's in this big pennant here, and that would just complete the other part of the pennant. If we ever got above 160, then then you'd be looking at something. But it's going to be hard to get the bonds above 160 if we have an interest rate increase, because interest rates increases means that the price of the bonds goes down. Because when the bonds go up, the yields go down, and when bonds go down, the yields go up, and that's what we have going on. When bonds came out to start trading back in '76, they came out at about $65 per 100,000. In other words, if you could buy a $100,000 bond for $65,000 and hold it to maturity, you made that much interest. But remember, interest rates back in those days were 7, 8, 9%, and in 1980, mortgage rates got all the way up to 12 and 13%. So it got to be a pretty big thing. So, okay, we got a caller from, it's our friend from California, Brent. How are you?
I'm doing well, Larry. How are you today?
I'm good, my friend.
Nice to talk to you again.
What can I help you with?
I talked to you last week about this time, ExxonMobil.
Yes, that's had one heck of a good move. That's been a good one.
Yeah, they don't always work, but that was a nice little pattern that set up, and it did work pretty well.
Yes, it really did. It left that huge gap. And, in fact, I think it's up about 4.5 points from the buy point. So that was one of those Gartleys that just lined up. Unfortunately, they don't all work, but when they do, they work pretty good. The good part is that they have a statistical, validity that they're going to work about 60 to 65% of the time, which is pretty good, for some of the things that we look at. So that was one of the better ones.
Yeah, I just appreciate the help with the pattern recognition, and that was one of those that worked out well.
By the way, are you getting any rain in your part of California?
Yeah, we've had a lot. What's kind of ironic is you were talking about your weather back there in Philadelphia. You're having, 70-degree temps, and I'm here scraping ice off of my windshield in the morning, so it's kind of not what you would expect at the time either.
I know it's hard to believe. We were a little cooler yesterday at 66. Today we're going to be in the high 50s, and then we get into the weekend, it's going to be in the 70s again. Almost at Christmas time, 70 degrees. I mean, we're almost like Florida. I mean, that's very unusual. Of course, the weather changes quite a bit, and when it does, it gets pretty cold. But El Nino has certainly, made some, big effect here. This will have an effect on our grains, I believe, into the growing season. But we'll either get too much rain or not enough. But hopefully you'll get a lot of rain there in California. Where my daughter lives in San Luis Obispo, they've been getting good rains. But the big lake there, Lake Cachuma, where Michael Jackson's home, Neverland, was within a few miles of there. That's one of the larger lakes. That thing is almost empty. It would have to rain almost like Noah's Ark days to fill that puppy up. But boy, it is really empty.
No, it's been good so far, and they're really getting a lot of snow up in the Sierras, and that's a big help as well. So
that's good.
Keep getting that kind of weather.
Yeah, well, I'm glad of that. I'm glad of that big snow, because I'm getting ready to do my Ironman downhill skiing pretty soon. So I want to get ready for that, come January 15th. And if you believe that, I still have 2 shares of the Brooklyn Bridge for sale. Hey, listen, I want to wish you a very happy holidays to you and Leanne, okay?
Same to your family, Larry. It's great talking with you again.
Yes.
Take care of yourself, all right?
Yeah. Thank you very much for calling in, Brent. I appreciate it.
All right.
You bet. I have about as much interest in downhill skiing as I do in politics, which is slightly less than none. In fact, the reason why I'm doing what I'm doing is because of what happened in January of 1960. It was the first time that we ever had a bank in Indiana that had electronic signs, that would give you the temperature. And I walked out of the fraternity house, and it was like 7 o'clock, and I was going in for one of my finals, and I looked up, and it was minus 22 degrees, and I couldn't even get my car started, and it was an air-cooled Volkswagen. Oh, well. We'll be right back. 877-927-6648.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we are within about 2 hours away from Fed time. We'll see what's happening here. One thing to keep an eye on, folks, is the Canadian dollar versus the U.S. dollar. We're up here. I wanted to show you this because our good friend Jim Bartolione sent this to us about 3 weeks ago. It's a monthly chart here on the Canadian, and we are really getting close. This goes back, I think, the time when Noah had the Ark, but was building the Ark anyway. But you'll take a look here at the Canadian versus U.S. dollar. See, we're up into this zone here, which is around the 138 and change level in the Canadian dollar. That's a beautiful ABCD pattern. That is going to have a lot of things. And if you look at it really closely here, folks, from a long term, this goes back, this is a monthly chart, so it goes back a very, very long time. You'll notice you have a perfect head and shoulders pattern forming there with the left shoulder, and then you have the top at the golden arrow there, and then you've got the right shoulder is over here, and that's what we're coming into right now. So you want to watch that one. That could be a really nice trade. And if you'll notice, we're having divergence in the relative strength, which is also, another positive thing. We had the same thing occurring, of course, in the New York Stock Exchange Index at that same time. So this is one that we're going to have on our watch list, really closely here. That's the main thing, to keep an eye on that very, very closely. Also remember that this is a bear market, as near as I can tell. I don't know what the Fed's going to do, but the market is how much it's going to rally from this level. We will have to be able to see, what's going to happen after this final Fed. Well, not final, of course, but after the news comes out today, to give us, what the Fed is going to do. But basically, we're heading down. We've missed the what I will be watching now. So we missed the fib point on the New York excuse me, folks, for the S&P 500 by 2 points, but it still could get there. 2053. 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.